Everybody, welcome to the morning market briefing. It's Monday, July 25th, 2022. Hope you guys had a good weekend. Ben, Tom, how was it? Good weekend?
Yeah, right.
Yeah, cool. Hopefully y'all's was also kind of
Or better.
yeah, met or better. That's our new tag on whatever we call this show. Janet Yellen. Dude, what's going on? She sees no recession. This is not an economy that's in recession, but we're in a period of transition in which growth is slowing, and that's necessary and appropriate. And we need to be growing at a steady and sustainable pace. Like, what is she looking at?
She's changing the definition. So what happened was, so she was on Meet the Press yesterday, and I just copied into the morning notes some of these quotes. And she says, first quarter GDP was negative. So we could see that happen to negative quarters of GDP growth, and that'll be closely watched. But I do want to emphasize what a recession really means is a broad-based contraction in the economy. And even if that number is negative, we are not in a recession now, which is basically like,
is there a broader based measure than GDP? I'm trying to think of what could be broader to measure the economy.
They're looking at jobs numbers and saying how that's been pretty strong for the last few months. But the thing is, jobs are always strong right before the recession starts. And then people get laid off as the recession progresses. We've already seen hiring freezes. We're starting to see jobless claims tick up. And I think she's just trying to hope that they can limp into the election, clinging to a majority somehow in the Senate. And I just don't see that happening.
I mean, it just continues to be what we've seen all along, which is, changing the story, trying to change the narrative as it happens. Inflation is transitory. Inflation is supply chain. Inflation is, you name it, they've changed it. Putin's price hike has nothing to do with anything we've done. And then, this is the same kind of thing, which is recession's only recession when somebody else's fault. This isn't a recession. This is a slowdown of growth. But the problem is we don't have growth. We actually have contraction.
Yeah. And there's a real economic consequence to this, because when the policy is so anti what is going on, it's almost like an addict who doesn't admit that they have a problem. Yeah. And so there's not going to be a solution. And unfortunately, this means that the recession will be more protracted. This could be a contributing factor to a more protracted recession.
Yeah, you're not doing anything to prevent the recession because there isn't one.
They're
winking. If you're listening, I winked at Ben.
They're pointing to inflation as the issue. They've already she passed the buck to the Federal Reserve on that, saying that the administration is doing whatever it can do to bring inflation down. But we've already talked about some of the reasons they're trying to bring inflation down, and I don't think that is consequential right now. I mean, I think there are other things you could do to help inflation. They talk about consumer spending remaining solid, but of course that's in nominal terms. It's not in real terms. Industrial output has grown. Credit quality remains very strong for now. And household balance sheets are generally in good shape. Again,
eroding
very rapidly, and maybe you have about 2-3 months before this really hits the fan. And I really think that there's 2 to 3 months left, because we went from 9% growth in deposits at banks in Q1, based on a simple average of what the banks reported this last quarter, to 3% growth in Q2. So you already decelerated 6 points. Household balance sheets will likely be worse off at the end of Q3 than they were the prior Q3.
It just seems so, even we always criticize kind of the policymakers for being so academic, but it seems so academically disingenuous to not only kind of change the definition of what is a recession, but to also acknowledge this data point without recognizing the trend of decline that got us there. Yeah, this data point may be better than it has been in other periods of recessions, but it's not what it was 6 months ago.
And you're rapidly going in the wrong direction.
I mean, it's lunacy, man. Crazy. Big week in terms of economic data. Wednesday, Tom, probably the single biggest day on this front. We got the Fed meeting, expectations for a 75 basis point hike. What changes the calculus? What gets us either 50 basis point or 100 basis point, or can anything get us there?
I think that 50 basis points is off the table. I just think the jobs have been too strong. The Fed is in too much of a corner that they need to raise rates in order to get inflation down. We've seen really no pickup there in terms of their effect on inflation. I think, I mean, if you look at futures, there's roughly a 10% chance we'll get a 1% rate hike. And the only indicator I would say is that, people were expecting the ECB to do a quarter point hike and they did 50. And I mean, that was basically set in stone. And we had an article that was sent in that morning from a client was like, hey, I don't know if you guys saw this, but it's basically no matter what going to be 25 basis points. And then they did 50. So I think that in terms of, all of the central banks right now, we need to err on the side of hawkishness. So I would say buckle in for 75 basis points, but if 1% comes in, don't be surprised. That being said, we saw really, really, really strong buying in bonds at the end of the last week, and things I think are a little bit overbought, at least for the time being, particularly with this news coming. And so right now is a time for caution in bond world, because if they move it up 75 basis points or 1%, that's going to definitely deepen the inversion we have on the yield curve, which could always cause problems with bond portfolios. So that's something we're definitely keeping an eye on.
Ben, we get Q2 GDP. I mean, we've been pretty clear on what we think that number is going to be in terms of will it be positive or negative. What's your base expectation? We have Atlanta Fed GDP now calling for minus 1.6. And yet the expectation is still positive more broadly.
Yeah, I think the thing is the expectation was coming down pretty rapidly. So I think that it'll probably be negative would be my guess. I'm not ruling out some weirdness that actually puts it positive. But it seems like it'll probably be negative. The big thing will be the deflator. So when you look at actual GDP, you look at the total output and then you subtract inflation. And so that inflation component is obviously a big component, because that is a drag on the actual real GDP, the big headline. And so what they'll come out with is their inflation number, and then they'll give you their real GDP number. And that's the expectation, that's up 0.4. But it uses a GDP price index that's 7.9%, which is down from 8.2% in Q1. I think that, and it looks from the data, that inflation accelerated in Q2. So to have a deceleration from 8.2 to 7.9 in Q2 doesn't make any sense. So for that reason, I think that GDP price index will probably come in higher. Real GDP will probably come in negative, but who knows with this number again, they might massage it just a little bit, because the other thing is you get two more looks at it. You get a second revision and then a third revision to this number. So
that third revision will be fine. They'll be through the midterms.
Yeah, right. So I mean, you might end up having a fairly aggressive Q2 GDP initially, but then it could get revised down. That's just kind of how it works.
Absolutely huge week on the earnings front. I would argue that this week, maybe unlike a quarter ago, this week I would argue that earnings are probably a bigger story than the GDP or the Fed meeting action. Ben, how are you kind of prioritizing and digesting these things, and what are you looking at most closely right now?
Yeah, you've got the biggest companies coming. You got Apple, you got Google, you got Microsoft, you got Amazon. Who else did I not mention? I think you got Meta, Intel. I mean, Comcast. I mean, every single company is reporting, it seems, this week. So you get the big ones tomorrow will be Google and Microsoft, Texas Instruments, Visa. So those will come out in the evening. In the morning, you'll get Unilever, General Motors, GE, UPS, Pulte Homes, Kimberly-Clark, Raytheon. So there's some big companies coming out tomorrow. I wanted to camp out a little bit on Apple and Amazon really quickly. Apple is in the news this morning because they're offering a discount on their phones in China, which they just don't usually do. Potentially they have a little bit too much inventory there, which would be significant. And then Amazon is expected to post a negative 2.5% number on their e-commerce side. And I would actually take the under on that. I wouldn't be surprised to see them post a negative 7%. Actually, if you look at the trends, they were already down negative 3% last quarter. And so I don't think, again, things have improved all that much over the last quarter, excuse me. So I think that Amazon will be something that'll be very interesting to watch. That'll be on Thursday, as will Apple. Tomorrow, I think GM will be an interesting note. Are they seeing more containment on the supply chain issue. It seems like they are, but it also seems like they might be seeing some pressure on the consumer side. So any concern on that side could get the stock down, unfortunately. So those are the big ones that I'm watching. UPS will obviously be significant as well, just to see how many transactions are going. We saw FedEx remove their Sundays. They're doing less on Sundays now. That was announced last week. And so whether or not UPS follows on that will be interesting to see.
Yeah, it's gonna be a busy week. I think this is where, as a client, understand that, behind the scenes, we'll be updating really our views on everybody's that is reporting, certainly every company that we hold, as well as every company that's kind of in our universe of potential options. I would expect, obviously the earnings matter, but also the guidance, the commentary. This is a period where I think really looking for the nuance is crucial, especially as you're looking for the companies that are operating the best. There are obviously economic factors at force that can ding numbers, but who's weathering that storm, I think, almost becomes the more predominant narrative. So busy week. We will be here all week at 8:30. If you have any questions or any particular companies you want to hear about, let us know. But if it's in the portfolio and they're reporting this week, we'll probably be talking about it. So we'll wrap it up there. Hope you guys have a great day.